Back to the Value Investors Club. I'm your host, Simon Wunderlich. Let's get right into it with VIC readings, the format where we look at the best of the best investment recommendations by the best of the best value investors out there. Let's get right into it with iShares, JPMorgan, USD, EMG, MKT. Ticker is EMB. A short recommendation. Filed on November 2nd by Choplin, 1065 price at that point was $80. Description: like everyone else, I look back to late 2021 and I think it was beyond evident that things were stupid. I carried some cash and put on some hedges, but never enough in hindsight. I'm in search of fire insurance while the house is burning at a reasonable price. I feel like the fire might get worse, and it's now a small roar, which has brought pricing back to a reasonable level. The VIX has been retreating and markets have risen. Thus, pricing on insurance is getting more attractive. I'll admit this is a more qualitative theme than quantitative. I don't have an ISDA, so look to the public market for that hedge. I did well in PFIX, but not enough juice to satisfy my demanding LPs. Enter EMB. iShares JP Morgan USD Emerging Market Bond ETF EMB. EMB is liquid and, as its name suggests, an ETF for emerging market sovereign debt. Top holdings are listed below. I'm just going to read the first three: Kuwait Estate of Government, MTN; Uruguay Oriental Republic of; Ecuador Republic of Government, and then many more. You can pause the video if you want to read them. For more granular statistics on duration, concentration, etc., see here. It's a link from iShares to from the iShares side to that bond. To that ETF. In a world of 4 to 5% 10-year USD and 7+% 30-year mortgages, a 5-ish% yield on this portfolio is grossly inadequate to compensate for the risk. There are already reports of a lumpy market for USD, and the episode on the UK gilts a few weeks ago just highlights the risk of G8 debt. And in any market hiccup, I am impressed that a dealer will quote the 2045 debt of the Republic of Ecuador or Kazakhstan at a reasonable level. The price of EMB in that scenario is likely to cascade down rapidly, and what I think could be an intermediate death spiral. I feel like this instrument should trade much wider than it is to USD 10 or 20 years. Given the interest rates you can get on the cash rebate, I think this is an attractively priced insurance policy. A few different ways to play. One, simply short the ETF, and then invest the proceeds to reduce the cost. Two, a pair trade against a better US risk, maybe long the LQD and short this. Three, this is big enough that there are listed options that I think are attractive and provide the juice I have been looking for. If you think that where there is more chaos to come, the debt markets will likely cease in some way before the Fed blinks, and that spillover always moves to the emerging markets debt space. With recent elections and protests across the globe, I believe this risk is larger and bigger than is being reflected in the category in this category of investments. Inflation is causing some Inflation is causing those at the bottom of the pyramid to rise and destabilize their government and balk their financial obligations. A 2045 obligation is hard to think about when you can afford food and fuel. This is a much this is as much a geopolitical hedge as an inflation credit hedge, and I think it is being offered at an attractive price. Again, the options can't be traded in size, but you get the picture. There are other emerging market funds that you could trade in LIEU, but I like this one because it is most liquid. Catalyst: shit hits the fan. Thank you very much for tuning in. This is not recommendation or advice. This is only education. See you next time.